So we had a chat the other day about business protection insurance, and you were talking about
Yeah,
relevant life policies.
yeah,
Was keen to find out more about that, but decided we should do it on video, so
yeah.
you can
Good
tell me
idea.
all about it. So
Yeah,
initially, just what is it, and why should people like myself who have their own limited companies be interested in it?
yeah. So it's called a relevant life policy. It's a life insurance policy, but instead of having it in your personal name, which a lot of people do, it's actually having it in the company name. So the company is the owner of the policy. Um, the reason you would do that is one of the main reasons is the tax benefits you get from it. It's available for directors or if you have to work for the company, either as an employee or as a director. So you could have it for a member of staff who's not a shareholder or a director, but it was predominantly for smaller businesses, the business owners. I'll give you an example. Say you've got £10 a month policy, life insurance policy that you pay from your personal account. If to pay that premium, you've got to make, depends how you pay yourself, but you've got to pay corporation tax, dividend tax, maybe some income tax and national insurance. When you factor all that in, you probably have to make £15, £18, maybe £20, I'm not sure the exact figure, to get down to your 10. Whereas if it's from a limited company, it'll still be £10, but then also you get that can be an expense against corporation tax. So really you're only paying, even though it says 10, it's really costing you about £8 compared to maybe 15, 20 quid in your personal account, even though both statements would say £10. So that's the massive.
So you could argue it's approximately half as expensive.
Yeah, it usually comes out to half. People will be all different how they pay themselves. Some might pay themselves a high salary and pay income tax and national insurance. Others may just pay dividends. It depends. Even if you didn't pay any dividends, there's a corporation tax, there's still saving to be made there. So what the benefit gives you is you can either have the same cover and it costs you in theory half, or you can actually increase your cover for the same money you're paying.
Okay, so obviously the difference would be then the policy is taken out by the company, which means the beneficiary would also be the company. So in the event of your sad demise, how exactly does that play out for your family and loved ones?
So the beneficiary you can select, and you would select your family as the beneficiaries. For those people out there who are employed or have been employed and have ever had a death in service policy, this is exactly what that is. So you'd select your family members as the beneficiaries, and then you'd put it into something called a trust to ensure it goes to them. The benefits of a trust are, one, the speed in which the money is paid out. You don't have to go through what we call probate. It doesn't take time to go through if you've got a will, to go through all of that. And the other thing is it falls outside of your estate, which means I'm not an accountant, but I do know that there is inheritance tax that can be paid on some of the estates. It falls outside of that.
Setting up the trust be something that you would do as part of setting up that policy?
Yeah, it's all really easy actually, because I think all the life insurance providers now, you can actually do it online. So at the end of the application form, you just select the trust and who you want as the beneficiaries and the trustees. So it's all pretty straightforward. A lot of them don't even require a signature now. And the other thing is, Stephen, it doesn't actually cost anything. It's all free to put into trust, which is
that's really cool.
Yeah.
So it's not an added cost. And speaking of these sort of costs, obviously, like everybody's circumstances are a bit different, but in terms of maybe ones you've done recently or an example just for a ballpark for people, like what is an example sort of how much benefit you could get for a certain premium?
Yeah. First of all, just to point out, it doesn't cost any more than a normal personal life insurance policy because you're still covering the person. I'll give you an example of my own. I've got a limited company and me and my wife on there, and I took one out each for £500,000 till age 75, which age 75 is the maximum age you can have this policy to, by the way. And it's costing us, so we're both non-smokers, both 36. It's costing us about £25 each per month. So if that's £500,000, that's only about a fiver per 100 grand. Now, if we were smokers, if we were older, say in our 50s, that premium will change. But it's a rough example.
Okay, that's really good. And if anybody watching wants to contact you about it, how should they do so?
Yeah, you can contact me either by email, LinkedIn, or my phone number. Phone number 07825 795251. Email raj.bogan, BOUGHAN, at what-life.co.uk.